Sat Shri Akal, everyone. Welcome back to the Crypto Khalsa and one of the best episodes that I think will be streamed today. Today we have one of the best DLMMs that I've ever seen, and I'm personally one of the first adapters, one of the first investors into the protocol. Also a proud holder of the one of the 439 holders of the Metronics NFTs. Uh, Great to have you guys, Hank and Doc. Happy to have you on the platform. How are you guys doing?
Very good.
Thank you. Very
Thank you.
good. Thank you for having us.
Yeah, thank you. Happy to be here.
Awesome, awesome. So, guys, let's start by a brief introduction. Could you let me direct the questions to both of you all, and could you start by telling us a bit about your background and what inspired you guys to enter the world of Web3? We can start with you, Hank.
Yes, I can give it a start. Hi, everyone. Um, I think both of us, Doc, I mean, we started during the first DeFi summer. I don't even know when it
Mhm,
was, 2020, 2021. So long time ago. And when smart contracts first were really starting to be utilized for DeFi, that's when we got hooked. And since then, we've been in the space and we've followed it closely through its ups and downs. Yep, that's pretty much from my side.
mhm,
Yeah, exactly. It feels very long time ago, even it's just a couple of years. I think I started with crypto roughly 2017. Um, and then roughly what Hank said when the DeFi summer kicked in, Pancake Swap, Sushi Swap really like flourished.
mhm,
We watched the space. We were just contributors, right, on the sideline, but we had our tech team, we had our own company, so we thought, hey, this is
mhm,
just a unique opportunity. Having these smart contracts online, seeing that this is fully automated, non-custodial, this could be the next big thing, right? And then we thought we need to be part of this. And then
exactly.
we jumped in, started as builders, and this is then the
Mhm.
rest is history. And now we have a killer app with Metropolis. So
Hmm. Okay. Let's go back to the early days of Metropolis. What inspired you to create Metropolis, and could you walk us through the exact moment that sparked the project, and like you just knew that you had to do it? I mean, Doc, you have a very good technical background. So, what was that one pain point you saw that had to be solved through this protocol?
So a couple of years ago, when we really watched the space and checked out all the different AMMs, right? We had the Uni V2 area, and then Uni V3 came up with this concentrated liquidity, and we were thinking, okay, what kind of technology we choose for our own protocol, and
Mm-hmm.
what we are really fans of. And then there was this kind of day where we checked out Trader Joe. It was a very new kind of very innovative technology. No one used it yet. And then
Mm-hmm.
we did our deep dive and thought, okay, this is amazing stuff. We will probably come later to it a bit closer how it works, but we have seen all this flexibility, the efficiency, and what you can really do with it. It comes very close to an order book, but has all this kind of automated trading enabled, right? And when we have seen this, we thought, okay, this is the tech we want to build on. We took the
Mm-hmm.
risk because at this
Yeah.
time, Show 1.1 was no one really knew it. Now it's big, with TradeShow itself, Meteora, so a lot of large
Mm-hmm.
protocols are using this technology now. But at this time, we just thought, hey, this could be the next big thing, and we want to build on top of it.
Mm-hmm.
And I think the key aspects were like the flexibility and what you can do with it and how close it is to an order book, because we think the world will more and more move to Web3, right, to on-chain, and market makers will come on board, very like key like big players come on board, and they want to have this flexibility. They don't want to just open a UniV3 position, but you cannot do anything with it, right? So
Mm-hmm.
so that this was basically the aha moment for us and the core reason why we choose Trader and build on top of it.
Hmm, that is very interesting. Let's talk about why you chose Sonic as the foundation for Metropolis, and what unique opportunities do you think Sonic has presented you guys versus other established chains? Question is open for both of y'all.
I I think I can take this one. Um, there's some. there's something I think to be said about Liquidity book that Metropolis is running, and that is, if you compare it firsthand with the Uni v3 when it came out, is it is way more flexible and efficient. But the downside is that it uses more gas fees, so it's a little bit less efficient in terms of gas fee usage. And the kind of understanding from us back then was, okay, over time, trading like gas fees will go towards zero. So the trading fee aspect is the gas fee aspect is over time going to reduce and reduce and reduce. So as this the industry will evolve in that direction, the protocol will become more and more powerful compared to
Makes
Uni
sense.
v3 and Uni v4. And
Mm-hmm.
that's where Sonic comes in, because Sonic is super fast. It is very cheap, and these are the two criteria to really make Metropolis and DLMM as a technology shine. And then it has something which I find extremely uh, well designed by the Sonic Foundation, and that is their fee monetization. So what they're doing is 90% of the fees that are that a protocol earns, it 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 receives back. And if you now look into the future where apps going to be more seamless, where you might not even know anymore on which chain you are, and you start to integrate account abstraction and these kind of features, then having the ability to get 90% of gas fees as a protocol back, you open up the doors to actually start
To
paying the gas
reward
fees
more
for
your
the user
customers.
down the road. Yes.
Oh
So it
yeah,
really
it
opens this window to the
Mhm.
for the future, and I think Sonic is well positioned there. Yep.
And and
Mhm.
maybe what I can just add is,
Mhm.
usually when you build a protocol, you have your kind of dev environment, right? Where you have a test
Oh yeah.
chain where you can build
Mhm.
all our, and our devs always pick Phantom. So we basically build our full protocol on Phantom on the testnet.
Mhm. Mhm.
And then when Sonic approached, like basically we knew, okay, Phantom is forking, and they create this new environment with all the
Mhm.
benefits what Hank just described. We knew, okay, our devs love the technology. I think Sonic will even be stronger than Phantom, so we need to be there.
It totally makes sense. Doc, I would like to elaborate more on the Trader Joe's perspective. I would like to understand that the architecture that you forked is about version 2.2 that I could research. Could you tell us about what customizations or enhancements did you make to adapt it to Sonic, and some of the performance characteristics that you would like to highlight?
Um, no, that's a very good question. So for 2.2, so this is what this is the base protocol we use, right? The rest is all built on top of it. The maker vaults we will hear later, then the hooks we use for the farms, the staking pool, everything is built on top of 2.2.
Mhm.
And on the core protocol, we haven't changed anything. Um, and I think this is a very important part to know, because Trader Joe is battle tested. They had like
Mhm.
many different audits, and
Mhm.
and this is important because this brings security to everyone who's investing, right? So even
Absolutely.
changing, and on the smart contract, you can just one little line of code which can destroy everything. So for this reason,
Oh,
for Cho 2.2, so for the base protocol, we intentionally didn't change anything. Um, so, but the most changes or optimizations we did is on our backend, because
mhm.
I can
Mhm.
tell you, forking Trader Joe or using Trader Joe tech was not so easy, because the only thing what you have are the smart contracts.
Mhm.
Everything else what you need to build, like the front end, the back end, the subgraphs, is custom. So we all build it
Mhm.
from the scratch because it's not public, right? So
Mhm.
and for Sonic, we had to do quite some optimization steps because the chain is so fast, and
Mhm.
is generating so much data, that
Mhm.
we had to optimize our subgraphs, enhance our RPCs, right? So being really much faster. Otherwise,
Mhm.
users cannot benefit from this fast chain. So long story short,
Mhm.
so on the core protocol itself, we have not changed anything on the code. We mostly
Mhm.
worked on the back end and on the on what the people see on the front end.
Mhm. That is a very interesting answer. Thank you, Doc. Uh, let's dive a bit more deeper into the basics of the DLMM architecture and how it improves upon the traditional AMMs like Uni V2 or Uni V3. Um, what are the differentiations and what is concentrated liquidity in Metropolis, and what does it mean for everyday users exactly?
So maybe I can pick it. So
Mm-hmm.
this is not sure to do. Should we share our screen actually? This is
Mm-hmm.
something we
Yeah,
should.
absolutely.
It,
We can do that. We
we
can
can do
do
it.
that. We can go
Okay,
through
so
whatever
then
we want here.
okay, then let's try this out live here. Let me
Mm-hmm.
see, because maybe it's a bit easier for than to explain. Can you see my screen? Is this working?
Not yet, but I think it's gonna
I
come up.
think let me add
Ah,
it here. Yeah.
here we
Yeah, there
go.
we go.
So I already jumped into the protocol. So
Mm-hmm.
what? So maybe let's start, like, take some steps back and start what to compare. You always need to compare it to something, right? And an easy way
Mm-hmm.
to compare it is to a Uniswap B3 position. On
Mm-hmm.
Uniswap B3, when you create a concentrated position, you choose the range of into
Exactly.
which price range you want to deploy your liquidity in, and then
Mm-hmm.
you get an NFT back, and this NFT is facilitating this liquidity. On Uniswap,
Mm-hmm.
the only thing you can choose is the range, right? You want to go
Mm-hmm.
from, I don't know, like $2,000 east to 5,000. This is where to deploy liquidity.
Mm-hmm.
On
Mm-hmm.
Trader Joe, Liquidity Book or DLMM, it's different. You deploy liquidity um, vertical, horizontal, vertical, vertical
Yeah.
into price bins, which you can see here.
Okay.
And
Okay.
these price bins act as little pools. So this means,
Hmm.
so you can see here there's two colors. You have the blue color and the white color. In this case, we are in the Sonic USDC pool, and
Uh-huh.
each blue color is USDC, and each white color
Mm-hmm.
is Sonic. You have one
Mm-hmm.
active bin in the middle where the trading happens. So how does this
Mm-hmm.
work now? If someone is deploying liquidity, you can just type in the amount you want to add, and then you can customize your position as you want, and you
Mm-hmm.
can handle each of the bins individually, because each
Mm-hmm.
bin is an ERC1155 token. And I
Mm-hmm.
said at the beginning, it's so close to an order book because it means every bin on this side is a buy order for Sonic with USDC,
Mm-hmm.
and every bin on this side is a sell order
Buyer
of
of
Sonic to
yeah,
USDC.
sell order for
So
Sonic. Correct.
and you
Mm-hmm.
can see it moving here, right? So every time when a trade happens within the active bin, it's completely slippage free. And as
Hmm.
soon as one bin is empty, so for example here in this bin, it's not so much Sonic anymore, it will
Mm-hmm.
move to the next bin, and this is how the price is developing, because each bin is presenting a specific price.
Hmm.
And as a user, you can then basically manage each bin individually. You can take bins out, add bins, you can change the curve, right? You can go curve, bid
Yeah.
ask, you can do whatever you want. You can use it as
What's the difference between like spot curve and the bid ask?
yeah.
What are the
So
differences? Yeah.
spot is adding your liquidity equally across the bins. On
Hmm.
curve, it's more concentrating around the active bin, and on bid ask, you spread your liquidity away
Away
from
from.
the active bin. So
Hmm.
spot is more neutral, right? This is how Uniswap
Makes
is providing liquidity. For
exactly.
curve, you concentrate on, for example, if you have stable coins, you concentrate your liquidity around the active bin because you have a price target there. And for bid
Uh-huh.
ask, usually traders use this, right? So for example, if you want a DCA in or if you want a DCA out, right?
Hmm.
You can use this as, and you sell, or in this case, you buy Sonic as when the price
Hmm.
drops. So
Makes
so
sense.
so DLMM is not only like a liquidity provisioning tool, it's actually something what traders use as well to opt in and go in and out of coins. And
Hmm.
maybe just to add here, because it's just a very interesting fact. Um,
Hmm.
when these bins get converted, you basically traded your token, but you didn't pay any trading fees. You earned
Hmm.
fees.
You burn the piece, okay?
So you can
Mm-hmm.
trade tokens without paying any trading fees. You earn while you trade.
Hmm. Okay.
So it's quite cool.
Very interesting. And this is not possible in a traditional AMM, I believe, right? In Uni
No, it's not.
V3,
No,
for
it's
you
not.
cannot like distribute in a concentrated like different curves. So I think this gives an opportunity to a lot of market makers to distribute their liquidity across different bins, because it's like an order book running. So it's like small pools inside the main pool, so you can like add different liquidities alongside different directions.
Exactly. And yeah, and
Mhm.
you can deposit, withdraw it individually. So for example, if you don't want to have this part of your position anymore, you can just take it out, but the rest is in.
Mhm.
If you would like to build something like this with Uniswap, you need to create like 31 simple like positions and need to manage this somehow, which is you can do it automatically, but as a normal user, very
Mhm.
complicated.
Hmm. So it is the optimization about like how you manage your smaller pools to avoid impermanent loss, and how you can like add up the fees. So of course, one more thing that I would like to add, because the bins are so differentiated, I'm sure every bin would have its own categoric fee as well, right? So that fee would actually compound, and that
Yeah,
will give an opportunity.
yes, so each bin has its own ERC 1155 token. And as
Uh-huh.
soon as the spin is earning fees, trading
Hmm.
fees, it will auto compound into the spin. So
Correct.
each pool has its own fee setting. So for example, this pool here, the specific pool is a 10 BPS pool. This means from one bin to the next, you jump by 0.1% price change, right?
Correct. Mhm.
And each time a trade happens, you pay 0.1% trading fee on the base. So this is always the minimum fee you pay when you trade. And as
Mhm.
soon the volatility goes up, so this means there's a lot of bin jumping, right?
Mhm.
Because bin
Mhm.
jumping in our sense mean that the price changes. And this is
Mhm.
actually quite nice because it's part of the core protocol that we have a kind of volatility oracle. And if the volatility
Mhm.
oracle goes up, it means high volatility, and this increases automatically the swapping fees and is helping
Mhm.
to compensate impermanent loss for the liquidity providers. So,
Hmm.
so
Makes sense.
we don't need any external oracles, which is quite nice, but we still have
Mhm.
dynamic fees.
That is super interesting, Doc. Thank you so much for explaining it. I think this is a very interesting insight for users to see. And I think this is one of the first videos where we are explaining how Trader Joe's protocol is actually working from behind the scenes, because I don't see a lot of tutorials there. That is
Yeah,
very interesting. Thank you for that.
yeah.
Also, I would like to understand, Doc. Like Metropolis obviously promises zero slippage trading. So, could you explain through this screen share that you did, how is this achieved in practice, and under what conditions does it actually hold true?
So zero slippage trading means that when someone is trading a token from A to
Mhm.
B, is not
Mhm.
paying anything related to the price change, right? So slippage basically means that your trade is changing the price in the pool and you get slightly less token that you could get. So this is the
Mhm.
slippage, right? And the slippage and what we mean with slippage free trading is for example when
Mhm.
you trade within the active bin. So for in this case here, it's you have like 70
Mhm.
Sonic in the spin and $3. When you trade now two Sonic, you will trade within the active bin, and this is 100% slippage free. The only thing you will
Mhm.
pay is the trading fees.
Oh, okay.
And for for these kind of very highly volatile tokens like this here, this is not so
Mhm.
relevant. But if you, for example,
Mhm.
jump into a stable pool like here, you can
Mhm.
see the main liquidity is concentrated highly in one bin. And this
Mhm.
means here, for example, in this bin, you could trade 20 to $30,000 completely slippage free.
Hmm. Oh, that is interesting. Hmm.
And this is the reason why our protocol on Sonic right now is one of the best
Hmm.
protocols to establish packed assets and stable assets for trading. So look at this here. This is a
Hmm.
good example. We have $130,000 in this pool, and we facilitated $500,000 in trade in volume in the last 24 hours.
Which is very
That's,
unusual, I would say, because
that's a 3x volume on liquidity.
yeah,
So that's what
which
you
is
want to
very
have.
hmm, exactly. That is interesting. That is an interesting insight. Thank you for that, Doc. I'm sure everyone would really derive a lot of values from this. Let's move on to a very interesting topic, and I think Doc will be requiring to do a lot of screen shares today. So let's move to my favorite topic from Metropolis that I've been researching for, and I'll be a proud owner of a Maker World soon. Uh, would want to know more about Maker Worlds in a simple language, not too technical. How do they work, and why does Metropolis consider them as the first permissionless vault in DeFi?
So Hank, should I give it a start, or do you wanna jump in? I'm fine.
You can give it a start. I think you're in a good run.
Oh yeah.
Okay.
Continue, and I will
Okay.
just add if I have something to add. I'm gonna jump
Okay.
in.
Okay. Awesome. Maybe before we jump, how the maker vaults will work or are working,
Mhm,
let's explain why they should exist in the first place. So,
mhm,
what we have learned, we running this protocol now for quite some time, right? And what we
mhm,
have learned is for heavy DeFi users and people who understand the DLMM tech, this is awesome,
mhm,
right? You can do so much nice stuff. But if
mhm,
you, but our vision is to bring this technology to a broad user base, to average daily users, right? And for
mhm,
this, it's very complicated because you need to make so many decisions. What range, what shape, what allocation, which pool, which bin step, right? And
mhm,
for people who are deep in the tech, they love it. But for people who
mhm.
don't actually know what to do and how to start, it's nearly impossible to get into this stuff. So for this reason, we said, okay, we need to build something which allows both, right? The tech guys in the trenches, they use the technology as they want, and for people who just jump in and enjoy the technology but don't need to decide anything, only if they want to go in and out. So that's how the maker vaults emerged. And so what usually create like how usually the DeFi space reacts to this is by having non-custodial vaults, right? Vaults which are run by algorithms.
Mhm,
Itchy, Beefy, Gamma, right? They are name like known brands. The issue with
mhm,
this is that these vaults, and Trader Joe had vaults as well, but the issue
mhm,
with these vaults is they don't react on the market conditions. and
mhm.
and they
Okay.
actually don't I mean, we just talked about DLMM and how nice it is, how flexible it is, right? And just
Mhm,
having a vault with a normal algo and is not using all this kind of tech, it is worthless. So we thought, okay,
mhm,
we need to build something where humans can manage it or AI
mhm,
agents in the future. And this is how the maker vaults got created. So what does it mean? It means, and we have this little video here. It means that you have a vault, which is complete. It's a smart contract, non-custodial,
mhm,
where users can add liquidity, and
mhm,
then we call it an operator or curator, who is
mhm,
managing the liquidity. Basically, can decide
mhm,
everything, right? Can decide in which bins, which shape, how much active, non-active. So the operator is taking all the decisions. And then
mhm,
the user is just participating. And then the
mhm,
fees, what the vault is earning with the fees, like the Met rewards, everything what this pool is earning, right, goes 100% to the
mhm,
users.
mhm.
So in this way,
So,
we have, yeah, yeah.
so in simple terms, it's like in hedge fund market, you have a simple managed account, right? So that a user can use their own centralized account, and the hedge fund or anyone can have access through the APIs, and they can actually manage their fund and of course take some fees out of it. So what your permissionless system is doing is their decentralized systems are now being accessed by the operators like techies like us who know how to concentrate liquidity across multiple steps and bins just to optimize their earnings, reduce the impermanent loss, and make them money. because for a normal investor, they don't want the headaches of the techie side of things. They have a good understanding of what DeFi and everything is, but I think concentrated liquidity or the bin steps, it's a bit too technical for a normal DeFi user, right? So what they need is like they need operators like us to manage funds for them and make them money while they sit and relax. And of course, they can take some fees of the money that they are making for us. In simple terms, is that what you're trying to say, Doc?
Yes, yes, I think it's mostly correct, but there's one large difference to the traditional world,
Mhm.
and
Mhm.
it's this non-custodial aspect. So
Hmm.
the operator cannot send these funds away, cannot use it. So in a kind of
Right.
sense, right? The operator has no access to these funds. The only thing what the operator can decide is how to
Is the
place it into the
strategy.
vaults. Yeah, exactly.
Got
And this is a
it.
very important point. It's a very important point because this is the trust factor of for the user, right? Um,
Exactly.
and yeah, but other than that, I think it's completely correct. It's
Hmm.
completely correct.
So to keep it simple, it's like the operator won't have access to any funds, but he will have access to change positions accordingly. So the user can easily opt in and he can opt out if he doesn't feel that the strategies that are being operated by the operator are fine. So if he's not making any money or he maybe even losing money in one of the operators, so he can shift. And what Metropolis is doing is like they are creating an open market for all the operators, all the techies who understand the concentration and the updations. You can actually choose which maker is giving you and it can make you good profits, and if they are able to deliver in a consistent way, so you can choose to pay with them or you can like take out your liquidity and you can either choose other operators as well. That is
Yes,
super
so
cool,
that
Doc.
yes, so this is fully correct. And maybe just before we jump more deeper into this one, I
Hmm.
think what for us what was really important, because in the DeFi space often we have this kind of situation that we have one player who gets all right, who's winning it
Oh
in
yeah.
the background.
Oh yeah.
But when we designed this product, we thought, okay, we want to build a win-win-win situation. So the user
Hmm.
should win, the operator should win, and the protocol which we are operating should win.
Hmm.
And this I think this product has a very nice balance, right? The users wins because it earns all the fees and
Hmm.
is getting all the benefits of the DLMM tech. The operator
Hmm.
gets the operator fee paid by the
Hmm.
TVL in the pool, and we as a protocol we earn nothing with it. The only thing what we earn is the volume.
Hmm.
So we earn with the volume, right? When the vaults generate volume, we earn trading fees, and this is how the Metropolis earns money. So, and this is a very nice equilibrium of the different players using this tool, right?
Hmm.
Um,
That
and
is super cool. Yeah.
and
Hmm.
maybe because you said this very nicely that people that the users at the end can then choose which operator to use and to take, which vault to take. And for this reason, we thought a lot about how could we present this on the front end that
Hmm.
LPs, like liquidity providers, can make informed decisions. And for this
Hmm.
reason, the vaults are highly transparent. So
Hmm.
let's use this one here. So that's the Ease S vault. And if you're interested if Doc is doing a good job, right? You can go into the stats and then you can see how much he has active, how much he has in the reserve. And you can see here it's much more Ease in the reserve, which means that this vault
Hmm.
is betting that Ease is outperforming Sonic at the moment. You can see
Hmm.
the stats over the time, and you can see here that's the green curve, how this vault is doing over time on the market. And when you, for
Hmm.
example, deployed liquidity in here 50-50, this vault would have outperformed the market by like nearly 5%.
Hmm.
You can see the fee earnings, you can see how active the operator is. So I think you have
Hmm.
all the information you need to decide which vault to pick.
And maybe if
Hmm.
I can add just right here is that the P&L numbers you see have everything included. So
Oh
impermanent
yeah.
loss is calculated in, the fees you earn is
Hmm.
calculated in, the operator fee you're paying is calculated in. So me as a liquidity provider in one of these vaults, I really have a click. I click once.
Mhm.
That's all I
Mhm.
need to do, and then I get all the reporting telling me, is this going well or not? So I can go in my dashboard. I can always in one view see, is this a profitable vault for me over time? What can I
Mhm.
harvest? So it's really, really nice. Yeah, one click, no more active management needed, and you get all the rewards and can see the performance.
That's so
Hmm.
cool.
That
That's
is
so cool.
some tech there, and I think that is the reason why I really wanted to highlight this, because I think very less technology is able to like really excite me to a level that I can like really showcase them, and I'm really excited to show what piece of art you guys have built. So really big heartful congratulations to you guys. I think this is one of the best products of this year that I've seen, and may you guys wish, like, I really wish you guys a lot of success with this. And I think not only for the LPs, but for a normal investor, like a normal guy who has $100 in Sonic, they can easily be a part of this. And of course they can easily earn, so someone else is managing it efficiently for them. So I think that that is very interesting, and with super cool analytics you can like really play geeky stuff, play with
Yeah.
all this geeky stuff and be excited about it. That is super interesting. uh
Thank you. Thank you very
one
much for the
one
kind
thing,
words.
yeah, absolutely. Thank you, guys. One thing that I would like to ask, I would really like to understand the rewarding and the primary utilities of the Metro token, from governance to real yield, and how do they incentivize long-term engagement currently? Because I see you are giving rewards in Metro tokens currently, right?
Yeah. Yes.
Y-
Yeah.
Yes. I can, Doc, if you want, I can give it a start,
Yeah. Yeah.
and then you can jump in. So
Mhm.
the Metro token is the reward and governance token. And maybe just to start out, how did this token come to life? Is it's in a complete fair launch. So we call it fair launch. It's a liquidity event.
Mhm.
So the first ever tokens minted, and the and were yeah, launched in a liquidity pool. So the community came together and funded the first liquidity pool. So that's why Metro is
Mhm.
held by many users. I think more than 4,000 something holders of Metro. It's a very diversified holding.
Mhm.
That's kind of the birth of Metro, and then the token is meant as the reward and governance token. So
Mhm.
what that means is when you're certain pools, when you provide liquidity, you earn the Metro token. Now there's
Mhm.
more utility on top. So the idea is not just, okay, I take the Metro token and then I can I that's it, and it doesn't come with any benefits. The idea is that if you own Metro token, you are kind of participating. You're part of the Metropolis community, and you're part of the protocol. So what you're
Mhm.
doing is you can stake it actively, and you earn a portion of the trading fees that are being earned. So if you've seen before where Doc showed the overview of the fee settings of a pool, you will have seen that down below is a 20% fee for the protocol and 15% of 15% there. So are going to the Metro stakers. So they just stake Metro and they earn then in USDC. So in
Mhm.
USDC
Awesome.
tokens, they earn part of the trading fees. And that
Mhm.
is at the end the appeal. So the better the protocol performs, and Liquidity Book, as we've shown, is really good at capturing volume and capturing fees. The more USDC payouts are coming through this mechanism. That's at the end the idea.
Mhm.
Reward or big liquidity providers from the community that bring liquidity with the reward token, and with that
Mhm.
you get access over a part of the fees over all the pools that are there. So that's
Mhm.
the value proposition. There's bribing and on top. So
Mhm.
this means we have a system where 30% of the emissions are controlled by Metro holders. So let's take an
Mhm.
example. I love a certain pool. I don't know. Let's say ETH
Mhm.
Sonic is my favorite pool. There I have the most tokens in. Then I can use the Metro share to vote for this pool and increase the Metro emissions there. So I
Mhm.
have also a governance say in the Metro emissions there. Um,
Mhm.
but it's not fully because in 100% Metro
Mhm.
emissions, this can get very quickly
Oh yeah,
this can become I don't know how to say it, jeopardized or
yeah.
taken
It
advantage
can
of.
be
So
of
yes,
disadvantage of, let's say. Yeah.
yes. So the idea is really okay. The core protocol based on fee revenue and based on
Yeah. Makes
volume,
sense.
70% is going to be allocated of the
Mhm.
major emissions, and then we have
Mhm.
30% really to bring that community governance aspect in.
Hmm. Also, since we're talking about incentivization and rewards, I would really want you guys to highlight more about the Metronics NFTs. What about the 439 holders, of which I am also a proud owner of? What do you think these NFTs will be fitting into the ecosystem, and what unique value will they offer to, well, to
Mm.
the holders, basically?
I could give this also
Yeah,
a
yeah.
start. So the Metronics at the end, these I think
Mhm.
nowadays it's 2025 and everybody's talking about meme coins and the community that comes with meme coins. But for us, there's nothing building more community than having a PFP to show your alliance and to a protocol. So there's a big community aspect to it, and our
Mhm.
designers they put a lot of energy into that aspect that they work as PFPs that
Mhm.
they're cool, that they're that you can every person can find, I think, something to identify with. Um, but they also come with utility. The initial utility was having a front row seat in the fair launch in the beginning. We gave
Mhm.
them out to all kinds of Phantom users. If you were holding, I don't know, goggles, you had a chance to claim
Mhm.
an NFT. If you were holding, yeah, any of the uh, the big OG Phantom, you had always a chance
Mhm.
to claim these NFTs in the beginning and become
Mhm.
part of our new protocol. But nowadays, what then happened
Mhm.
is a certain allocation of Metro was
Mhm.
meant as an airdrop for the Metronics, and the Metronics
Mhm.
community said, "Hey, it would be cool to have a treasury. Take this airdrop of Metro, build a treasury, stake it,
Mhm.
and then earn those USDC rewards for the NFT holders." And that's what happened. We did a vote, a majority, I think 95% voted in favor of it. And what we then
Mhm.
did is in the collaboration with the PaintSwap guys, really cool,
Mhm.
really good working with them. They enabled it
Mhm.
now that on PaintSwap you can click that little claim button and you will always the earn the USDC that the treasury behind the Metronics is earning. And they have, I think,
Mhm.
320,000 Metro, so they're the biggest Metro holders. They're fully
Mhm.
locked for 3 years to earn the highest USDC reward amount. And if Metropolis generates good volume and fees, the generation for these goes up. Right now, it's a bit more quiet because Sonic has calmed down a bit in between season
Mhm.
one of the airdrop. But as the volume will come back, then also the fee generation to these Metronics will come back.
Hmm. I think that was a very good answer, Doc. Thank you for that. Thank you, Hank, for also collaborating on this. Um, let's move towards the ending of this podcast now, because it was a highly technical podcast, and I think now let's reflect back on um, the development and the future, what it holds, and so what's next, guys? Any upcoming features? I understand there's a huge scope development going already for the Maker World enhancements. What about new chains? Are you planning to extend beyond Sonic, perhaps to other chains, or via integrations with other AMM protocols? What are you planning next?
So maybe I can give it a start. Um, Regarding to the question regarding multi-chain, so we actually focusing fully on Sonic right now. So we
Mm-hmm.
have no plans to bring Metropolis to any other chain. So we see huge potential for the Sonic environment. Of course, there is a switch now between season 1 and 2. There's always a bit of friction,
Mm-hmm.
but the technology is so nice, so we think it will have a very nice future. So we really focus with Metropolis on Sonic and stay there.
Mm-hmm.
Regarding next development, so
Mm-hmm.
our tech development as well as our communication and business and everything, we focusing on the maker vaults right now. So we
Mm-hmm.
want to scale this. We have seen very, very nice first users. We have way more than 100 to 200 users already in the vaults.
Mm-hmm.
We getting our first 500,000 deployed. So it's growing. It's growing. It's step by step, and it's always the same if we have a very, very new product that it takes a time to get this into the market.
Of course.
Um, for example, we are developing a new program that's called VIP program, a VIP
Mm-hmm.
Vault Incentive Program.
Mm-hmm.
And this we are quite excited about this. So this one will start soon. And with this program, we can incentivize LPs which go into the
Mm-hmm.
vaults. So we will pick high P&L vaults and
Mm-hmm.
will incentivize them on top of everything what they already earn. So we will distribute Metro, we will distribute Sonic because we earn Sonic with the fee M, what Hank explained at the beginning. So we will
Mm-hmm.
use this money and give this to the people who join the vaults. And this will be a nice tool for us to bootstrap the maker vaults even further and bring them. We are working on a referral system where influencers, calls, YouTubers, yappers, right, can use this referral system to make marketing around the vaults. So this is on top of our list. So really scale this product and bring it to a reach what it deserves.
Mm-hmm. Awesome, guys. Of course, we'll be posting the links of Metropolis and all the documentations that you guys have already listed on your websites. But apart from that, where can people learn more about Metropolis and stay updated on new developments?
I can answer this. So generally, join us
Mm-hmm.
on X or and in Discord. We have a lively community on both platforms. Generally speaking, we have something where it's the Sonic Maker Club. You will see it. It's a community on X as well, where operators as well as just DLMM users often share their strategies, share what they're doing, maybe new opportunities. So this is a good place to come in and take a look. And we also have trainings. So if you want to deep dive more into DLMMing, we have them at least once a month. Really
Mm-hmm.
deep dive training. It's intense. It's almost 2 hours,
Mm-hmm.
but it really gives you all the foundation. If you say, "Look, I want to get into this space and I want to see how I can take advantage of this," this is a makes the entry for you easier. And then join
Mm-hmm.
Discord. We have there the Sonic Maker Club. People join there and share their ideas. For operators, at the end of the day, the maker vaults will be most successful if we
Mm-hmm.
create an space for the operators to become really the best operators in the space.
Of course, of course, of
And
course, of course.
yeah, so this is really the focus. And right now we're benchmarking the vaults already. And so our
Mhm.
operators, they are outperforming Beefy and Itchy and all of those. So we're already happy to see this, but we really want to create an environment where the operators can perform their best. So just join us
Mhm.
on any of these
Mhm.
channels. Yeah,
One
it's a
one
really
thing I would
welcoming.
really like to so one thing I would really like to highlight about the Discord channel and especially the community. I don't think that I've seen many protocols actually investing so much of their time in training people on DeFi or the basics. I mean, really, really nice of you guys. Kudos to this. I mean, it's one of the best initiatives that I've seen, and I have been in one of those very interesting 2 hour grilling sessions, and it is a tremendous learning experience. And I think anyone who wants to learn and who wants to start with DeFi, should be a part of those grilling sessions, because I think that that gives them a good head start. And I definitely believe being a way maker vault operator is the next upcoming big business as volumes increase on Metropolis. I mean, people can really save this video when I'm saying this. I'm definitely sure as volumes increase on Sonic and on Metropolis, Maker Vault is going to be one of the biggest businesses that there will ever be. The kind of volumes that we are going to see in the future, it is going to make a mark, because it's technically changing uh, the hedge fund industry in a decentralized way. So what you guys have built, it's something which is not only unique technologically, but I believe it is changing a lot of things in this industry. So the more open we are, the more permissionless we are, the better we are. So on that note,
Awesome.
guys, um, let's end this podcast. Thank you so much for giving us your valuable time, Doc and Hank. I hope you enjoyed this session. And thank you for your time, guys.
It was a pleasure. Very nice question. Thank you.
Thanks for
Thank you,
having us,
Hank.
Roddy.
It was a pleasure, and I hope we become the best protocol super soon. On
We
that
will.
note, yeah, absolutely, guys. See you. Bye.
Bye
See you,
bye. Bye
everyone.
bye. Bye bye. See
Bye
you. Bye
bye.
bye.